about do's and don'ts for buyers in the home buying process? We've submitted an offer, we've got an appraisal, we're in that 30-day closing window. What should we be educating our buyers and sellers to do or not do in that period of time? Because this always pops up once in a while. So maybe if we educate a little bit out front, we don't have the situation in the closing stretch.
Sure. So I can definitely speak on the buying side, because that's typically what I represent, is the client that's buying the home. And there's a few things that for some might seem like common sense, but not for everybody. We see some crazy things happen in our line of work. So the thing to understand is when you apply for a mortgage, it's kind of like a freeze frame of your life. Here's your credit score, here's your income situation, here's your banking situation, what you have as far as assets, and we're qualifying you based on that. So if something changes in that situation, that can derail the whole process. Whether or not your underwriter has approved the file or not yet, don't make any major changes to those things. So for example, we qualify you based on your income and your current job status. So just because the underwriter tells you, hey, you're approved, we're going to close on this date, it doesn't mean you should go and
take 2 weeks off before switching jobs?
You don't want to switch jobs, period.
Okay.
Okay.
So don't switch jobs in the home buying process.
No, because again, we qualify you, based on your situation. We have to do what's called a verification of employment, and they actually do that right up into closing to make sure we verify it up front to make sure this is where you've worked and the income you've been making. But we also do it right at closing too to make sure you didn't quit within the 30-day processing time. People have done that. They get their closing scheduled and they think, all right, I'm good. I'm signing this tomorrow. I'm going to go and tell my boss some things that I can't repeat. And we find out about it, and guess what? Now that loan's not closing. So definitely any employment changes you want to make either before or after the process. You don't want to make during the process. And don't be afraid. If you're thinking about buying a home and you got a job change and maybe it's a big for your career and there's an opportunity, don't pass up on it. You don't have to. We do a 2-year look back of where you've worked, your employment situation. Okay. So just because you change jobs in the 2 years, that doesn't hurt you. Doesn't mean it's a bad thing. Keep in mind, if it changes how you get paid, that can affect things. If you had a salary job and now you take a commission-only job, that's difficult because without a 2-year history of making commissions, the underwriter doesn't really know how to base that income.
Okay.
Now, if you're going the other way, you're commission and now you take a salary job, you made the job easier for the underwriter because, hey, you have a set salary as opposed to that commission that can be up and down. So just be mindful if you have, if home buying is in your cards, if it's in the future, have a conversation with the loan officer and make sure you lay out some of those questions. Like, I never want to hinder somebody's career or tell you to pass up on a job opportunity, but if you want to buy a home, ask the right questions as to how that's going to affect the process.
Another question?
Sure.
Okay. Just last week I did a final walkthrough on one of my, first-time home buyers' homes, and they're measuring for appliances, and they're like, well, we're going to go to Home Depot and order our appliances, and I'm like, whoa, have you spoken to your loan officer?
Yeah.
Everybody wants their new appliances and they want them delivered at home, but if they're buying them on credit or buying them from a bank account, how's that going to affect us in that final home stretch to closing?
Another great question. This comes up often too. So when we take the application and apply for the loan, we're getting kind of a freeze frame of your credit. Here's what you have on these accounts. Here's what you owe on this. Here's your payments. So we know what's on your credit report at that time. Now, we also monitor your credit during the process all the way through the closing. So if you go and, again, you're a week away from closing, whatever it might be, and you decide, I'm going to go buy that couch. I'm going to go get that washer and dryer because when I move in, I want to be ready to go. I want to have that brand new stainless steel refrigerator I can look at that talks to me and does all kinds of stuff. You can't go open up new credit in a lot of cases.
There are exceptions?
There can be exceptions.
Okay.
But again, we figure out your qualifications based on where your credit's at up in the beginning. So if you have another, whether it's another lender, whether it's a creditor, whether it's a bank, if anybody runs your credit during the process, we get an alert and we have to investigate because it's our duty to make sure that, hey, did you open new debt that's going to change how you qualify? So if things are tight and you're just qualifying, and you go open up, you add $3,000 in appliances onto a credit card, now you got a $150, $200 a month payment. That can change your debt ratio, and now you might not qualify. And even if the underwriters approved you, if you've scheduled your closing, but you open up new debt, we have to investigate, and you might not qualify anymore.
So it could not only disqualify you from closing on time, it could also disqualify you from the home in general because you went and opened it too soon.
It could. I mean, it's not pretty when that happens, but
So-
it has happened. So you don't want to open up new debt. Now, you are allowed to live your life. I mean, if you typically use your credit card to fill up your gas, or go out to eat once a week, whatever it might be. I mean, do what you normally do. That's fine on credit that you already have. So we understand you have to live your life. It's not like you can't buy anything once you're in the process. But just know you can't go open up new debt. That can affect your qualifying. And at the end of the day, worst case, you may not qualify anymore.
So that new truck should wait till after
Yes.
we're moved in the house.
That new boat, the
Right.
jet skis that you want to
Yeah.
finance, hold off until you're done.
Okay.
Another thing too, your assets, we look at how much you have in the bank, and if you decide, well, hey, I want to go pay cash for this, instead of financing, I'm gonna go ahead and just buy these appliances outright. Well, if that's money that we're expecting to use for the closing, or in some cases, there are loans that require reserves, and what a reserve is, it's basically one month of reserves would mean when everything's all said and done, you have one mortgage payment left in your bank account. So that's 1 month of reserves. Some programs might require 3 months or 6 months or even 12 months of reserves. So just because you have enough to pay the closing costs, you might still need reserves. So don't drain your bank account.
So if you went and bought it all cash, and you drained your reserve that you needed for closing, then you might one, delay closing, or two, again, you might blow the whole process.
Yes.
So from the agent standpoint, Mr. Loan Officer, how do you educate our joint client of this through the mortgage process? Do you talk about this up front, or is this something that comes into play if they ask the question?
Well, absolutely. There's literature in the application package that points these things out, but it's a lot of stuff. Let's be honest, not everybody's going to read every single page of the application. A lot of it's pretty redundant, a lot of it's government disclaimer stuff, so sometimes you just kind of get lost in it. You go cross-eyed and then you just zone out and might not hit on that important thing. So it's always good to have that conversation. I mean, yes, you want things easy, you want the path of least resistance, that's just how we're trained, but if you want a good loan officer that's going to explain these things and just make sure you understand the situation. That's what I do. I want to make sure my clients not only get great service, but are going to close. At the end of the day, that's how we all get paid, and that's how you're going to judge us on how easy the closing was. That's the last thing you remember is the process, is the closing. So.
And don't worry if it blows apart, they blame the agent anyway, so then you won't have nothing to worry about. So, but normally things don't fall apart because we have these tough conversations up front. And Mr. and Mrs. Buyer may not want to wait till after closing to get their new appliances or their furniture, but if they really want that home to put those things in, they might want to listen to their loan officer, because one way or the other, they're going to find out.
Yeah.
Unless you have some rich family member that allows you to put it on their credit card, you should hold off on those things until we're done with the closing process.
Yeah.
So,
And bottom line, I mean, we know the situation. There's a lot of things that we're privy to that we don't discuss with the agent because they have a license to do what they do.
They're not allowed to.
We have a license to do what we do. So, but again, if things are tight, I'm gonna let you know. And most of my clients will come to me and just say, hey, Mitch, got this great opportunity, around the holidays, you got this Black Friday sale, whatever it might be. Is it okay if I do this? And I'll review it with them and let them know. I mean, sometimes it's hey, go ahead and pay cash. Sometimes it's, you can finance it or whatever it might be, but here's the paperwork we're gonna need. But again, it's all about having that conversation, just making sure we're on the same page. Because, we're a team, and it's all about, we want to be moving in the right direction, not going this way and this way.
Our goal is to get you home.
Yes.
I mean, we're different, but we're still a team. Like there's things I don't discuss with him. There's things I don't discuss with you that he doesn't discuss with me that we're not supposed to talk about. But in the end, it's a team effort that gets you home. And that's what we like to do, is get people home.
Yes.
There's nothing worse than you get to the closing stretch and something blows up over credit or something like that you have to delay or you can't put it back together. So by having those tough conversations and keeping everybody in the loop for a great team effort is how you get things done.
Communication.
Yeah, he's pretty good at it.